Good morning and welcome to Morning Markets with True Potential. Today we will look at incoming Chinese data and also a preview of tomorrow's UK CPI inflation print. A fairly quiet day yesterday in the markets, both from data front and also in the markets. We saw on the back of US market was closed yesterday for Juneteenth, National Independence Day yesterday. In back of that, we saw European equities markets rallying sideways but ending the day in negative territory. We also saw gilt yields rising in general across the board. This morning, though, we saw some data move coming out of China. We saw central banks cutting rates into their benchmark rates. This is on back of the already two benchmark rates cut announced in previous week. This, though, has not felt in the momentum in the Chinese market. Chinese markets continue to take a downward trend. This is on the disappointing data and growth data coming out of China. We also saw that moving into other pro-cyclical markets, like oil markets yesterday was weak. We saw oil dropping nearly 1% at one point, ending the day nearly down about $1 yesterday. That was also on back of some positive developments from Turkey and Iraq reopening pipelines, which could add another 500,000 barrels a day of net new supply coming out in next couple of months. Tomorrow we have UK CPI inflation print coming tomorrow for month of May. Markets are expecting around month-on-month inflation in the UK, headline inflation to come at 0.5%. That'll come down from nearly 1.2% in April. On year, it will land at inflation print at 8.4%, down from 8.7% in April. The troubling part was last time was in April. We saw the core inflation edging higher to 6.8% from 6.2% in the prior month. That meant that interest rate expectation for Bank of England was notched higher. Markets are not expecting much easing in core inflation on the back of stronger job numbers we have seen recently, and also the wage growth has continued to accelerate in the UK. We'll see how it evolves. That will also put some pressure on Thursday. Bank of England meets for their interest rate decision. Expectations are still for 25 basis points hike on Thursday, but there are increasing chances that Bank of England may have to continue to push rates higher. Markets are now probably setting for another 75 basis points hike in next three subsequent following the three meetings from here on. But nonetheless, if we read across any recent inflation trends from both from Europe or from US, and if they were to translate into UK and easing energy prices, any downside surprise in UK inflation print tomorrow will be welcome relief and probably give us some relief to the gilts market as well, which have been continued upward rise in the gilt yields we have seen over the past couple of trading sessions. But as always, we'll keep you posted. But thank you very much for watching Money Markets.